We are being joined by Karan Taurani, Senior VP at Elara Securities. Hi Karan, good to be speaking with you. Karan, when it comes to Trent, the store addition was working very well for the company, and especially the kind of addition they have done for Zudio. But it's now working just the opposite way. The kind of expansion that the company has undertaken, that's not reflecting well into the numbers. How do you read into the earnings trajectory for Trent this quarter? It's not expected to be a great set, but do you believe that it will continue for long?
Hi, good morning. I think if you look at Trent, they had seen issues, as far as store growth is concerned. We had seen rationalization of stores, both on west side, wherein we saw that net add of stores was negative, a couple of quarters ago. And even if you look at the case of Zudio, I think the first half, the store growth was fairly muted because there was some bit of rationalization there as well. But I think if you look at the numbers, particularly from Q3 and Q4, I think has shown sharp acceleration as far as store growth is concerned. This may be an indication that the demand environment, has kind of picked up, and whatever rationalization the management had to do in terms of stores, where the cities or the particular cities where the stores were not doing good in terms of throughput or there was increased competitive intensity, that is largely done with as a process. So I think from here on going ahead, what we can see is that Zudio can potentially grow at about 20% in terms of store growth numbers, and West Side can clock about 6 to 8% store growth numbers over the next 2 years. We don't foresee this number being aggressive because if you look at the past, Zudio and West Side, or rather Zudio has added about 200 stores on annualized basis. This year, again, the number of stores is about 212 if you look at the annualized FY25 number. So on this base of 750, we do expect convergence on store growth. Historically, store growth has been 30%, more than 30% also in the past. But on a steady state for the next 2 to 3 years, we believe that store growth will kind of stabilize at about 18-20% kind of a number for Zudio and around 6 to 7% for Westside.
Okay, Karan, this is Nehi also joining in. Thanks for that view. Also, give us a sense on where you are penciling Trent's quarter four numbers to be. We're expecting some moderation in revenue. PAT is something that we're seeing a large fall. Of course, you had a one-off in the base effect as well. But if you don't account for that, what are your PAT estimates? And do you believe that there is a metric that could surprise the street? Because there is a stark difference between what the company has reported in terms of revenue in its quarter four update and what the consensus view is on the street. So where are you penciling in this number to be? Are you somewhere in the middle over there?
In terms of growth, we had penciled in growth of about 32%, before the company came out with their preview numbers. And their numbers on the standalone business are at about 28, 29% odd. So it is slightly, below our expectations. But as I said, the only thing to track here is the LFL and the SSG growth. So in the last couple of 3-4 quarters back, the management did indicate that the SSG LFL growth will be in the range of early double digit, which last quarter as a negative surprise they mentioned could be high single digit. But I think going ahead, we may not see a bigger negative surprise on this in terms of SSG LFL growth. And if the SSG LFL growth sustains at these levels, I think stock in terms of valuations has already bottomed out. The second update would be in terms of margins. One should not expect like a sharp improvement. So I think from a top line growth perspective, if this quarter is around 30 odd percent, 28, 30%, on a steady state, what we're expecting is a CAGR of about 25, 27%. And we should see not a big improvement in margin, but yes, a small improvement in margin also with the medium term perspective, led by operating efficiencies. Of course, gross margins, will be flattish largely. But if that were to be the case, then you can talk about an earnings growth of anywhere between 30 to 35% for the company. And given where the company is trading at in terms of valuations, it's at about 33, 34 times EV/EBITDA. We believe that there is ample scope for the re-rating in terms of valuation multiples to happen from here on, because there are not enough discretionary names which are giving you high comfort in terms of 30-35% earnings CAGR.
But Karan, given the fact that there's a lot of competition that has already kicked in into this particular sector, we have seen companies getting aggressive. Case in point being Shein, now Myntra now offering like a 30-minute delivery. Give us some sense that is the industry already facing such sort of an headwind, and is the impact already seen in Trent with the kind of discussions that you undertake with the dealers?
So I think if you look at the competitive intensity, I think two things here. One is you have got competition in the offline segment, and second, the online segment. I'll first go to the offline segment because Zudio is 100% offline led, and Westside also 90%, over 90% of their revenue is offline led. So the point I'm trying to make here is that a lot of competition is coming in. New players are, expanding aggressively. But if you look at the likes of Trent, Zudio, Westside, these companies, they are top notch, right? So they've got multiple modes in place, for their company. One, of course, is the supply chain, wherein they actually have got a higher inventory turn. They launch fashions more often as compared to other companies, right? So they've got a better styling sense, they've got a higher inventory turn, and consumers, kind of shop more frequently. Second, they've got the customer cohort right as well. If you look at the customer cohort, is more led by Gen Z, who are more present on social media, and they actually want to try out, fast fashion and keep on wearing differentiated kind of styles and clothes. They've been trendsetters. That's the third thing. So if you look at the trends in terms of styling and fashion, Zudio has been a trendsetter ahead of peers. Fourth is that if you look at the peer set, I think the peers actually play more in terms of pricing and not in terms of fashion. Whereas I think Zudio is a perfect play wherein you get the right value product with a good style as well, which is a very high appeal for the youth audience or the Gen Z millennials, which is there. So I think these are modes which Zudio holds ahead of its peers, and that is why I think despite competitive intensity, they may not gain market share, but because of these modes, they will be able to protect their market share, and market share may remain stable for them. Second, in terms of the online part, if you see, I think online competitive intensity has always been there. It's nothing new, but the customer base of Zudio would, like to try out the styles and, want to actually, have the product in terms of offline and then, shop for it. So players like Myntra have been here in the market, and I don't see quick commerce being a very big risk for the likes of Zudio and Westside, because clearly apparel as a category is not suited for quick commerce because returns are very high. Today also returns in apparel are in the range of 30-35%. So any category which is very high in terms of returns is not suited for quick commerce in terms of economics. So there is no threat of quick commerce for apparel. So online is not a big threat as such. Secondly, in terms of Shein launch again, they are going to be present online. And Shein, of course, in terms of price points, does match up to Zudio in terms of styling as well. They will be superior because they'll have the global fashion sense over there. But, we have to see in terms of how things pan out on the supply chain part and how well are they able to execute online. So again, as I said, online D2C brands have been here. We've seen platforms being here. Despite that, over the last 3 to 4 years, Zudio has reported very strong growth. And I think that momentum will continue because they have a moat offline and they're not present online.
Okay, Karan, appreciate that view coming in. With that, we'll thank you and let you go. Thanks for such a good outlook on Trent, and now we know what to expect when the numbers really come out in a couple of hours. But thanks once again for joining us.